Hello everyone. Today we are going to discuss the market strategy. Market strategy is a report in which we give outlook for the next 2 to 3 quarters. So in the last outlook we mentioned that our view on the indices, that is Nifty and Sensex, is bullish and we expect markets to go higher. We continue to see Nifty targets of 8,000 to 8,200 in the next 2 to 3 quarters. Right now, if you look at the Nifty is outperforming most of the indices globally. In the last 3 months, Nifty has gone up by about 14%, which is one of the best performing indices. This has primarily been led by very strong flows towards India. FI flows, if we combine equity and debt, have totaled about $20 billion for this year only. So, which is a very strong number. So, to look at what has led to these flows, there are 3-4 important factors. First is the expectations of growth. We feel that the growth expectations have gone up significantly, and we are seeing some turnaround in the core industries. If you look at the latest data, that is the IIP number, it came at 3.4%, which was a positive surprise. Secondly, we are seeing growth across capital goods sector. We are seeing growth across electricity, very strong production numbers from cement, coal and fertilizer sectors. So this combined with the revival in animal spirits, which has been supportive, which has seen support from the new government, this is a clear indication that growth is expected to pick up even further. So we expect positive numbers from IIP and other growth numbers. In terms of the policy actions, the biggest kicker will come in the budget, which will be announced on 10th of July. So there are 3-4 important points in budget that the market will look at. First is that how will growth pan out? So over a period of time, the government has focused for the last 2 years entirely on cutting down of planned expenditure. So last 2 years our growth has been only 5%, which is much below the 10% average. So we feel that planned expenditure should go up, which is very, very important. Subsidy rationalization should happen for kerosene and LPG and fertilizer, which will be another very, very important pointer. Secondly, the fiscal deficit in the interim budget was pointed out to be at 4.1%. We feel that this is very, very aggressive, and the government should focus on a number closer to 4.5%, which will give them enough elbow room to have growth trajectory clearly laid out. Thirdly, on the tax numbers, there was expectations of rise in the tax base, and as we know that the Indians pay about 3 to 4% Indians pay tax. So I think the basket of people giving more tax has to be raised. So government has to do clear reforms on DTC, and secondly GST, which has been a very, very important indicator of tax reform, that has to go through. So these are the important points that we look at from the budget standpoint of view. And lastly, on the inflation front, we've seen some amount of rise in inflation in the last 2-3 months. Largely that has been driven by expectations of El Nino and possible drought. But we feel that these fears are premature, and possibly inflation numbers will hinge towards what levels we have currently. And lastly, the monetary policy, that will continue to remain at a status quo for the next 2-3 quarters. So we feel all the factors are aligned right now, which is stronger growth, a stable inflation, a stable monetary policy, along with the stable currency. We feel this is the right mix for equity markets to move higher. So we again reiterate our target of 8,000 to 8,200 on the Nifty. Thank you.